Hey there, it's Ron with Insurance for Texans, and I've got today's home insurance tip. But before I get to that tip, if you love what you're hearing, give us a subscribe. The playlist that comes with our home insurance tips is full of little nuggets, information that people ask us real life questions about. And if you don't want to miss any of it, hit the subscribe button and give us a comment. Let us know what you think. Today's home insurance tip revolves around identity theft. So we're constantly being bombarded with stories about hackers, about account information being stolen, passwords being given up. Seems like every major corporation in America has had a breach of some kind. We've all, in some form or another, been affected by this. Is there any sort of relief on your home insurance policy? It's a question we're asked frequently. And the good news is, yes, there is in fact protection for identity theft on home insurance policies. But let's talk about some caveats. So your traditional homeowner's policy does cover theft. And ultimately, we're talking about theft here. But it's not, identity theft is not normal because we're not seeing tangible property that's being stolen. Instead, we're having bank accounts flushed. We're having to repair credit reports, all things like that. So most of the companies have incorporated a separate line item that encompasses identity theft or identity fraud protection, or they're excluding it. Some of the companies actually don't cover it, but those that do, they have what's known as a sublimit. So let's talk about what that sublimit means. It means there's a cap on how much damage that they will in fact cover if you do have to make an identity theft or an identity fraud claim. Most companies, that's $15,000, $30,000, maybe as much as $50,000. So what does it cover up to that sublimit amount? Identity theft is going to kick in after you have a breach and your credit card or bank, it's not going to prevent it. So again, it's not going to prevent the fraud. It's not going to prevent the theft, but it's going to make you whole after the breach has occurred. Now, typically, if your credit card is used fraudulently, the credit card companies are just going to reverse those charges. It's not like a huge pain. But in the event that the bank account is drained or the credit card company is hassling you, they are going to reimburse you for those expenses. They're also potentially going to reimburse you for the time that it takes that you have to spend to get all of those things reversed. The other places they can help reimburse you for time spent recovering or repairing your credit report in the event of one of those breaches. Now, the question then becomes, is this better than something like LifeLock? And the answer is not really. It's not going to be completely better than LifeLock. It's actually going to be in addition to, because ultimately preventing a breach or fraudulent activity, this is not going to protect you. It is going to clean the mess up. So we do recommend it as an addition, not necessarily in replacement to. The reality is, for a handful of dollars a year, there is massive protection that is afforded to you in this circumstance, but it's not going to prevent. You have to be diligent. You have to monitor your activity. The policy will solve a lot of problems, but it's not going to prevent the actual occurrence from creating havoc in your life. So as a result, we do recommend it. It does afford protection, but you have to take steps to prevent it, just like you would a house fire. I'm Ron. That's today's home insurance tip. We look forward to helping you in the future.